All right, Bulls and Bears, we're back with another dose. We got a lot to get into. Worsening wildfires. This is the worst fire event to hit LA in forever. It's the worst they're saying of all time. The last I read, over 5,000 structures destroyed. What's that going to do to the housing market? It's going to drive prices up higher. We're going to talk about that here in a little bit. We've got a big announcement out of Bank of America. Huge bond losses. We're going to talk about what that means for Bank of America and the banking industry as a whole and how it relates to the cost of living, the elevated price levels, the real estate bubble, all of that. Rental homes being bought up by investors in a state that you would not expect. Rents fell nationwide. We're going to get into that here. And some more store closures, more layoffs, and a lot more. Let's go ahead and get right into it, starting right here. And Inc. put this out today. A $28 trillion corner of Wall Street is flashing a warning about the U.S. economy because bond yields have surged. And basically the investors buying these bonds, they see the inflation. They're not buying into the crap line that inflation is tamed or it's under control or even coming down, right? And they know the situation. That's why you're continuing to see yields spike and you're continuing to see elevated mortgage rates. And that's got what we just talked about the last report. Was it 250,000 real estate agents already left the industry? So they see the writing on the wall. They see they're not getting any transactions. Plus you have new rules as far as the commissions that real estate agents get. So a lot of things are hitting the fan right now, but it's in slow motion. This whole thing is playing out in slow motion. Many people want to see a Monday sell-off or an event that kicks off a financial tsunami. They want to see that Black Monday in the stock market that so many people talk about that we've seen over history. And I don't think it's going to be that. I think it's going to be more inflationary and more of a slow motion collapse until somebody pulls the rug out from quote unquote the printing press. Then you're not going to see a collapse. And they're just going to let these banks just continue regardless of the losses. Speaking of the losses, take a look at this. Bank of America braces for massive bond losses as yields soar. And what they're reporting here out of MSN, this is huge. Barron's estimates that Bank of America's paper losses on a portfolio of $568 billion of bonds could widen to $111 billion more compared with $86 billion at the end of September. Or could go from $86 billion to $111 billion or more, not by 111. But still a huge number either way, $111 billion. And folks, they actually don't have the funds to handle this. So what's going to happen? The buyer and lender of last resort, is it going to be the central bank coming in, buying these bonds? Folks, always remember they could just come in the back door with unlimited liquidity. And no matter how far underwater the portfolios are of these banks, they can just choose to go ahead and create the money and rescue the banks. That's the truth. So until somebody comes in and changes the structure, the financial structure, where the money is basically endless, none of this matters, right? There's articles out there about it, talking about this is a big deal, this bond loss. What do they say here? Bank of America braces for massive bond losses. They're not bracing for anything, right? Because all they have to do is get a liquidity injection from you-know-where, and they're going to be basically propped up, whatever you want to call it. They're going to be rescued. They're going to be the walking corpse. It's going to be propped up, right? So remember that. Remember that when you're thinking about, oh, there should have been a collapse 5 years ago, and not just, just normal people, but even economists have been saying there's going to be this collapse for years. The bubbles are going to implode. Folks, only if they shut off the money, the press, the printing press. That's what this boils down to. Why do you think so many people are talking about how we used to have a gold standard, we no longer do? Why do you think there's so many people investing in gold? Because that used to be the standard. They put limitations on how much money you can just create. But you can see where this is coming from. This is a system of money that's, some people say, not sustainable, but it's sustainable, unfortunately. If they sustain it, the inflation is just going to get worse and worse and worse. And by the way, did you hear what Janet Yellen came out and said? Try not to laugh. She came out and said the health crisis stimulus may have contributed a little bit to inflation. She said, quote, a little bit. That's in quotations. Folks, that was the big part of it. Yes, there was shortages and supply chain disruptions, but all those ships are off the coast of California, 100 plus at one point, ended up unloading at some point. Did that bring inflation down? Not really. Cost of living continued to go up. Since then, the cost of living has went higher, slower than before. So the powers that be are pointing to that as a win because it's slowed down, but prices are still going higher. Overall, the cost of living going higher. But Janet Yellen, a little bit, the health crisis, the stimulus from the health crisis may have contributed a little bit to inflation, folks. That's the understatement of the year, in my opinion. What do you think about that? Speaking of elevated prices, there is one area where you may start seeing some relief. You might already be noticing a little bit of relief in rents. And we have now this data here just out. Asking rents fell to $1,594. That's across the United States. Average, higher in some places, lower in some places, of course. That was in December. The lowest since March 2022. So we're at a nearly 3-year low in rents. It's not a very big drop, though. It needs to be much bigger to really help the people that are really in financial struggles right now. But yeah, the lowest since March 2022. So it's going on 3 years. That's a 0.3% decrease compared to the previous year. So when I say little, it's a little. A year over year, only down 0.3%. It was $1,700 in 2022. Now it's $1,594. So a little over $200 on average. And, it speaks to the cash flow or the lack of cash flow that people have, right? Because most people aren't borrowing money to pay their rent. So it comes down to savings. And we know that savings is very, very low right now for most people. And there you go. Rents are going to continue to drop with that, even though you have thousands of homes wiped out in Los Angeles. So I don't think rents are going to be dropping in LA anytime soon. In fact, I think this is going to cause a big surge in materials costs, not just for California, but the entire western part of the United States. And it's going to make home prices actually stay much stickier than a lot of people anticipated because the cost of materials and rebuilding, it's going to contribute to more shortages of housing, one, because all the homes that were just destroyed, but then just the materials and labor costs to rebuild these homes, it's going to bleed over into constructions of other homes and even materials just for remodels and things like that for people that didn't get their homes destroyed. It's going to lead to more inflation as far as I can see here. And still on the topic of rents, the DOJ are suing apartment landlords over a rent pricing scheme. And this was the app that they used to find the most they could charge for people based on location. And it compared the rents to other rents in the area. And they figured how much extra money people had, which was a lot of times not much, but they figured out just how to squeeze that last dollar out of everybody using this app. I don't think that should be illegal. People should be able to use technology to figure out what to charge or what the competition is and how to get a competitive edge. My kind of criticism of this whole thing is it's the mega corporations, the multi-billion-dollar corporations coming in, buying thousands of homes every year, thousands and thousands of homes. 1 and 2 homes in California owned by investors, meaning 1 and 2 people are renting from someone wealthier than them, the landlord. But not just in California, some states that you would not expect are also seeing this. Let's take a look at what's going on in Indiana. And I think this may surprise a lot of people. Nearly half of rental homes in 5 Indiana counties are owned by investors. So it's not just California. They're going to some of these states like Indiana and the Midwest that are historically lower in price. And those are the states that people are escaping states like California to go to because they're cheaper. You got Tennessee, Indiana, Illinois. The taxes in Illinois is another story. Maybe not Illinois. Iowa, the Midwest. We've got Kentucky, lower than states like California and most of the states here on the West Coast. But now with investors going to those states because there's more entry level priced homes over there, pretty soon it's going to be nowhere to run to and try to flee to a lower price state because the investors are going to come in, it looks like, and really keep home prices up in a lot of these different areas across the nation. And it's going to continue until something is stopped. There needs to be a law passed that says these corporations can't own more than, let's say, 10 homes. Right? If you limit these big investment companies, big investment firms, the Blackstones, the Invitation Home Loans, if you limit how many homes they can own, let's say 10, then prices would plummet just on that alone. You don't need higher mortgage rates. You don't need to change the bank reserve requirement like we talk about here. Just that alone, just stopping investors from buying thousands of homes would be a big drop and have a big price decline impact in the housing market, in my opinion. But what kind of person, in this case, what type of a lawmaker is going to actually pass that law? None, because when the housing market implodes, when prices start dropping significantly, the entire economy comes down with it. So it's never going to happen, I don't think, right? Unless they do it on the tail of some other disaster that brings down the economy and the entire markets, like all the different, black swans that we try to look out for here, which I still think is a very, very big risk, especially after what we saw on New Year's Day. I think we're going to see a lot more terror unfolding here in the United States. Remember, over 2 years ago, we warned you, maybe about a year and a half ago, that these types of things are going to become really, really common on U.S. soil. People said I was doom and gloom. They said I was fear-mongering. And we saw how 2025 kicked off. And turns out pretty much the hunches were correct. And they weren't just hunches. They were based on just facts. Look at all the data, all the people that are coming to the U.S. from different parts of the world, the hostility that the U.S. has caused around the globe for many, many decades with their interventionalist foreign policy and everything that goes along with that, the blowback from that, folks. So it's pretty simple. It's a 1+1 equation, in my opinion. That's how simple it is. And it's also simple to see that things are going to continue to escalate and continue to get worse as far as the risks and the black swans out there. All right, back on to the focus on the economy here. Store closures. Macy's and Kohl's announcing more nationwide store closures. Kohl's, I think, is very overpriced. I used to go to Kohl's quite a bit, but I'll only go there now if there's some sort of super sale or coupon or something. Macy's closing 66 stores. 66 across 24 states. I was surprised to hear that they even had 66 left open. They're going to close 150 total. Let's see what else here. Or the list of all the different places. What about Kohl's? 30 stores before April. I've kind of thought there were too many Kohl's out there. Will Kohl's and Macy's become the new Radio Shack? Remember Radio Shack? If you're in your 30s, you remember, of course, 30s are up. If you're 30 or older, you probably remember Radio Shack. What is it, 10 years ago, 20 years ago they closed? It's going to go with the way of the dinosaur, folks. And that's just the trend is what we're seeing here, these higher priced stores closing down. Now, the head scratcher for me is how are the Dollar Trees struggling? How are the 99-cent stores struggling? I think it's a lot of loss because of the 5-finger discount. California recently changed those laws where people can't just get away with stealing $900 and no one can stop them. It's going to be enforced now, and we're going to see how this all plays out. But it's actually a step in the right direction, if you ask me. One of the good things, or one of the few steps in the right directions, we can find when it comes to the cost of living, and in this case, what people are paying at these stores. Remember, your prices go up when somebody else gets something for free. When somebody walks away without paying, you're the one paying for it because the store is going to raise their prices to make up for it. Also, to kick off the new year, a lot of big job cuts. BlackRock cutting 1% of its workforce. What's going on there? Bridgewater cutting 7% of its staff. We talked about this last report. Washington Post, 4%. Microsoft, unspecified number of job cuts. Ally Financial, big in the auto loan industry, cutting 5% of its workforce. Folks, so things are continuing to implode but just in a slow motion fashion. Remember, an inflationary implosion, or you could call it an explosion, because things they're costing more. It's not an implosion where they're becoming less, it's getting bigger. It's slow motion, folks. It is the decline, if and when it happens, that's much more quick. It's like a stair climber up, but then an elevator down. But in this case, if they're going to continue pumping everything up with easy money, liquidity, guaranteed funding for the banks, no matter how many bonds or loans go bad, you're going to continue to see inflation go higher, folks, until some sort of monkey wrench is thrown into the gears of the printing press, as we say. Now, Wall Street Journal put this out. Xi Jinping muzzles Chinese economists who dared to doubt the GDP numbers. You think they're not cooking the books over there on those GDP numbers like they are in the United States? I wouldn't last very long in China, apparently. Muzzling an economist who dared to doubt the GDP numbers. So you're not allowed to doubt it. You're not allowed to question the official numbers, even though pretty much every report we uncover how phony these numbers are. And of course, they're doing the same thing in other countries. And it's not just that they're phony, they're based on a false premise. So for example, gross domestic product looked at as economic growth. Folks, when you spend more money, GDP, the gross domestic product, that number increases. So most of the gross domestic product number is consumer spending. Now, do you see why they have to keep the banks propped up, keep the money flowing, allowing people to go into more and more debt without limiting the credit cards and continuing to increase these lines of credit, even though record levels of debt should be a warning sign or a red flag? Banks aren't worried about it for obvious reasons. All right, one more thing before we get out of here. The new administration scheduled to take over, I want to highlight the word scheduled, on January 20th. Over 100 executive orders are already lined up. 100 executive orders. Now, executive orders, they can just be flipped in 4 years when the next administration comes in. So they're not permanent. It's not like a permanent law that gets passed by Congress or something like that. But 100 executive orders, folks, going to be big changes coming up here. And I sense a lot of unrest. And let me know what you think about this down in comments. I'm continuing to maintain my cautionary outlook here as far as investing goes. Not a lot in the markets right now. And continuing to wait for the fallout, because I think what we saw at the beginning of the year is just going to escalate, as well as a lot of other black swans we need to keep an eye on. Otherwise, we're going to keep an eye on everything else for you. Please let me know what you think about all this down in comments. I really like to hear your thoughts and opinions on any of this today. Just to wrap up, Bank of America, $111 billion in bond losses. Will it mean anything when they're too big to let go under? The bond yields continuing to rise because of inflation. Janet Yellen, her comments about a little bit of inflation because of the stimulus. I can't even believe that she still has a job with saying remarks like that. But no matter how wrong these people are, they continue to keep their job. Imagine if you and I could do that. We could be so wrong about everything and continue to keep our jobs, right? Just like this channel. This channel wouldn't even be around if I was as wrong as some of these people are that are quote unquote running the economy, right? If I came on here every episode and gave you the wrong information or said that something was going to happen that didn't happen, like I guess some channels actually still are around that said the home prices were going to crash. 4 years ago? They said that in 2020. Never happened. So maybe it doesn't matter, folks. Maybe just people don't even care. They're just not even really in it. Their head's not in the game anymore. They don't care. They're just kind of checked out of the whole situation here, the whole scheme. And they're just looking to watch cartoons or maybe laugh and be more entertaining. So maybe I'll start a comedy channel and just stop doing this whole thing. Anyways, folks, enough of me. I'm going to stop rambling. Thanks for being here, everybody. Keep stacking. As always, big love. Bye for now. Peace.